exposing the truth behind SRM, RGO, DWSN, SONM, and Alt. Are these hidden gems or just fool's gold? Today we're diving deep into 5 stocks that have been making waves in their own unique corners of the market. Whether you're a seasoned investor or just starting out, you've probably seen these tickers pop up on your feed, maybe even heard some buzz in online forums or from friends. But what's the real story behind these companies? Are they truly the next big thing, or are they just riding the hype train with little substance to back them up? In this chapter, we'll break down each stock, look at what makes them tick, and help you decide if they deserve a spot in your portfolio, or if you should steer clear. So grab your notepad, settle in, and let's get started on this journey of discovery. Quick takes, honest opinions, and zero jargon, coming up. We're cutting through the noise and giving you the straight facts. No sugarcoating, no complicated financial lingo, just real talk about what matters most, your money and your future. Each of these stocks has its own story, its own risks, and its own potential rewards. We'll keep it simple, actionable, and most importantly, honest. If you're tired of endless speculation and want a clear-eyed look at what's really going on, you're in the right place. Ready to find your next big move? First up, SRM Entertainment. This company might not be a household name yet, but it's carving out a niche in the world of toys and entertainment merchandise. SRM is all about creating fun, engaging products that capture the imagination of kids and collectors alike. From plushies to action figures, their lineup is designed to tap into the latest trends and pop culture phenomena. But what really sets SRM apart is their focus on licensing deals with major brands. If they can secure partnerships with popular franchises, their products could fly off the shelves and drive serious revenue growth. However, the toy industry is notoriously competitive, with big players like Hasbro and Mattel dominating the space. SRM has to be nimble, creative, and strategic to stand out. Their recent financials show modest growth, but the real question is whether they can scale up and become a major player. Investors should watch for news about new licensing agreements, product launches, and distribution deals. If SRM can land a big fish, the stock could see a significant pop. But until then, it remains a speculative play with plenty of upside, and just as much risk. They make toys and merch, think plushies and collectibles. Their products are designed to appeal to both kids and adult collectors, tapping into the nostalgia market as well as current trends. The toy industry is constantly evolving with new fads emerging every year. SRM's ability to stay ahead of the curve and anticipate what consumers want will be key to their success. They've shown some promise with recent product launches, but the competition is fierce. Every year, dozens of new toy companies try to break into the market, but only a few survive. SRM's management team has experience in the industry, which gives them an edge, but execution is everything. Investors should keep an eye on sales numbers, customer reviews, and social media buzz to gauge how well SRM's products are resonating with their target audience. The buzz, it's small but growing. SRM has managed to generate some excitement among collectors and toy enthusiasts, but they're still flying under the radar compared to the industry giants. Their social media presence is growing, and they've started to build a loyal fan base. If they can keep the momentum going and expand their reach, there's potential for significant growth. However, it's important to remember that early-stage companies like SRM often face growing pains. They need to scale production, manage supply chains, and navigate the challenges of retail distribution. Any missteps could slow their progress or even derail their growth entirely. For now, SRM is a company with promise, but it's not without its risks. If they land a major licensing deal, this could pop, but so far, it's a risky play. Licensing is the name of the game in the toy industry, and SRM's future success hinges on their ability to secure deals with popular brands. These partnerships can open doors to new markets, boost sales, and elevate the company's profile. But they're not easy to come by, and competition for the best licenses is fierce. SRM has made some progress, but they're still a small fish in a big pond. Investors should be prepared for volatility, and be willing to take on some risk if they believe in the company's vision. Keep an eye on news releases and earnings reports for updates on licensing deals and product launches. If SRM can deliver, the rewards could be substantial, but so could the losses if things don't go as planned. Time will tell if SRM can make the leap from niche player to industry contender. For now, it's a stock to watch, especially for those who enjoy a bit of risk and the potential for high rewards. Next, RGO, or Regencell Bioscience. It's a biotech aiming to tackle neurological disorders. This company is on a mission to develop innovative treatments for conditions like ADHD, autism, and Alzheimer's disease. The biotech sector is known for its high stakes and high rewards, and RGO is no exception. Their research is focused on finding new ways to address some of the most challenging and complex health issues facing society today. If they succeed, the impact could be enormous, not just for patients, but for investors as well. However, the road to success in biotech is long and fraught with obstacles. Clinical trials are expensive, time-consuming, and often end in failure. RGO has some promising early-stage data, but there's still a long way from bringing a product to market. Investors need to be patient and prepared for a bumpy ride. Biotechs are boom or bust. Either they cure something big or they run out of cash. RGO is no different. The company's future depends on the success of their clinical trials and their ability to secure funding to keep the research going. Biotech stocks are notoriously volatile, with prices swinging wildly on news of trial results, regulatory approvals, or setbacks. RGO's management team has experience in the industry, which is a plus, but there are no guarantees in biotech. Investors should be prepared for the possibility of significant losses if things don't go as planned. On the flip side, a breakthrough could send the stock soaring. It's a classic high-risk, high-reward scenario. Only invest if you can stomach the roller coaster. Biotech investing isn't for the faint of heart. The ups and downs can be extreme, and it's easy to get caught up in the hype or panic during a downturn. RGO's stock price will likely be driven by news flow. Positive trial results could lead to big gains, while setbacks could trigger sharp declines. It's important to do your own research, understand the science behind the company's products, and be realistic about the risks involved. If you're comfortable with volatility and have a long-term perspective, RGO could be worth a look. But don't bet the farm. Biotech is a sector where diversification is key. DWSN, Dawson Geophysical, Oil and Gas Exploration Services. This company provides the technology and expertise that energy companies need to find and extract oil and gas reserves. DWSN specializes in seismic data acquisition and processing, which helps their clients identify promising drilling locations. The energy sector is cyclical, with fortunes rising and falling along with commodity prices. When oil prices are high, demand for DWSN services tends to increase, but when prices fall, exploration budgets get slashed, and companies like DWSN feel the pinch. The company has a long history in the industry and a reputation for quality, but they're not immune to the challenges facing the energy sector. If energy prices soar, DWSN could ride the wave. The company's fortunes are closely tied to the price of oil and gas. When prices are high, exploration activity picks up, and DWSN services are in demand. This can lead to increased revenue, higher profits, and a rising stock price. However, the energy market is notoriously volatile, with prices influenced by global events, geopolitical tensions, and shifts in supply and demand. Investors in DWSN need to be comfortable with this volatility and be prepared for the possibility of sharp swings in the stock price. But if green energy steals the spotlight, they might be left in the dust. The world is moving toward renewable energy sources like wind and solar, and this shift could pose a long-term threat to companies focused on fossil fuels. DWSN will need to adapt to the changing energy landscape or risk being left behind. Some energy services companies are diversifying into renewables, but it's not clear if DWSN has plans to do so. Investors should watch for any signs that the company is evolving its business model to stay relevant in a rapidly changing industry. Now let's talk about Sonim Technologies. They make super rugged phones for tough jobs. Think construction sites, emergency responders, and outdoor adventurers. These aren't your average smartphones. They're built to withstand drops, water, dust, and extreme temperatures. SONM's products fill a unique niche in the market, catering to customers who need durability and reliability above all else. The company has a loyal customer base and a reputation for quality, but the market for rugged phones is relatively small compared to the broader smartphone industry. Cool niche, but profit? Still a question mark. Sonim has struggled to achieve consistent profitability, in part because the market for rugged phones is limited. They face competition from larger smartphone manufacturers who offer ruggedized models as part of their lineup. Sonim's success will depend on their ability to differentiate their products, expand their customer base, and control costs. Investors should watch for signs of improving margins, new product launches, and partnerships with major distributors. Until the company can demonstrate sustained profitability, the stock remains a speculative play. SONM is a company with potential, but it's not without its challenges. The rugged phone market is a tough one, and only the strongest players will survive. If SONM can carve out a larger share of the market and improve its financial performance, there could be upside for investors. But for now, it's a wait-and-see story. And finally, ALT, or Altlayer, is all about blockchain infrastructure. This company is working to build the backbone of the next generation of digital finance. Blockchain technology has the potential to revolutionize everything from payments to supply chain management, and ALT is positioning itself at the forefront of this transformation. They're developing tools and platforms that make it easier for businesses to adopt blockchain solutions, with a focus on scalability, security, and ease of use. The company's vision is ambitious, and if they can execute, the rewards could be substantial. If crypto gets hot again, ALT could be on fire. The company's fortunes are closely tied to the broader cryptocurrency market, which is known for its wild swings. When crypto is in favor, companies like ALT can see explosive growth as demand for blockchain infrastructure soars. But when the market cools off, interest can dry up just as quickly. ALT's success will depend on their ability to stay ahead of the curve, innovate, and attract customers in a rapidly evolving space. If not, well, you know how crypto goes. The market can be brutal, with prices crashing just as quickly as they rise. ALT is a high-risk, high-reward play, and investors need to be prepared for the possibility of significant losses. The company's technology is promising, but the competitive landscape is fierce, with new entrants popping up all the time. ALT will need to execute flawlessly to stay ahead of the pack. So, what's the bottom line? All 5 of these stocks, SRM, RGO, DWSN, SONM, and ALT, are high-risk, high-reward. They each have unique stories, promising potential, and significant challenges. Investing in these companies isn't for everyone. You need to be comfortable with volatility, do your own research, and be prepared for the possibility of losses. But if you believe in the story, the vision, and the management team, there could be big rewards down the road. Only buy if you believe in the story and can handle the swings. These stocks aren't for the faint of heart, but for those willing to take on some risk, they offer the potential for outsized returns. Remember, investing is a marathon, not a sprint. Stay informed, stay patient, and don't let emotions drive your decisions. If you're looking for safer bets, there are plenty of blue-chip stocks out there. But if you're chasing growth and willing to accept the risks, these 5 could be worth a closer look. Hit follow for more quick-fire stock breakdowns. We'll keep bringing you honest, straightforward analysis to help you make smarter investment decisions. Whether you're looking for the next big thing or just want to stay informed, we've got you covered. Thanks for watching and happy investing.